I have a habit of having to watch while I speak, so I'm going to speak loud. Thank you for having me, MJ, Planet Blockchain. Thank you, everyone. Before I start, I'm just going to mention, to Mohammed, that with the blockchain, there are many opportunities, financial opportunities, but there are also social responsibilities. And the blockchain is beautiful in that it allows us to solve some of these problems. So I really wish you success and hope that you make a lot of progress in what you're doing. My name is Amir. I'm the PR manager for Ice Rock Mining. The picture you see above. I'm also an investor. I actually got involved with them first as an investor. And what you're looking at, this picture here, is the inside of one of the alleys inside the mine. What's unique about us is the owner, Malik Morsajev, I hope I'm pronouncing that correctly, he purchased this mine. It is a former Soviet military bunker, and you'll see a picture of the front of it. And we refurbished it and turned it into a Bitcoin mining farm. The reason why it made a lot of sense is because the natural temperature inside the mine is 12 degrees Celsius. There's no cooling cost, basically, for the miners. The other thing is that the cost of power in Kazakhstan is only 3 cents per kilowatt hour. So we have two very distinct advantages. There's a third advantage, which I'll talk about in a moment. I won't talk about now, but if we can go to the next slide. Well, my presentation is a lot more old school than everyone else. So I'll have to spice it up with information, which I'll do. I went to visit the mine myself before I invested in the company. That's me right there, standing next to Malik. Malik is in the center. There's a team of about 12 people, programmers, engineers, marketers. And so I wanted you guys to see the front of the mine. You can see the mountain behind it. This is the only entrance to the mine. And there's room for 5,000 ASIC miners inside there. It's actually quite a big space once you get in. Can you scroll down a little? So before I show you this quick video, let me give you the capital structure of the ICO, and also a little bit about why we're different than the cloud mining operation. Our capital structure is 10% goes to management, 20% goes to care and maintenance, 20% is reinvested in miners so that you don't have to stop mining after 2 years, because ASIC miners will stop after 2 years. So we reinvest 20% so that you can continue getting paid beyond 2 years. And 50% goes to the token holders, you guys. It's an ERC20 token on the Ethereum network. Everything is in the smart contract on the blockchain, so you have that. Do you want to just real quick touch on the YouTube video there? And this is actually my visit of the mine. A little commercial here. Do we have volume or no volume?
Yes, we've got volume.
That's inside the mine. Fast forward to the video now.
Safe and securely, and this is one of the safest and securest locations I can think. Show me that
you can hear the miners in the background.
Investors, and that they want to see their investors making a return. And
so this is on YouTube. You guys will be able to go on YouTube and see the link. Go ahead a little further. Okay. I want to just talk about Bitcoin for a moment, because how you approach mining is going to be contingent upon what your view is on Bitcoin. So in other words, the risk and the reward is contingent upon what you believe Bitcoin will be. Now, it's important for you guys to know what our approach is to Bitcoin. So we're very far from price discovery in Bitcoin. What you see as the price today and the mechanisms that go into price discovery right now are at its infant stage. For example, words such as consensus, confidence, and price stability are just now being formed. In other words, if you look at fiat currencies, for example, there's a draconian law that says you have to accept fiat currency. It is a law. So if you're selling something and somebody comes to you with dollars to buy it, you have to accept those dollars. Now, why is that? The reason why that law went into place is because the creators of money knew that if consensus was not achieved by the currency, it would fail. Consensus is a natural mechanism that allows a currency to function as a currency. Now, Bitcoin is a big threat to the banking system because Bitcoin achieves consensus naturally, without a central bank and without a law. We all exchange Bitcoin, but we all know that it's decentralized. Nobody is telling us what Bitcoin is and what it should be worth. So, when you think about how many people are involved in Bitcoin and the amount of assets that have yet to come into the blockchain, you realize that Bitcoin is still a baby. There's less than 1 or 2% of assets allocated to Bitcoin. Now, why is that important from a miner's perspective? It's important because we believe that we're just at the beginning of this. In other words, we want to be mining Bitcoin and holding Bitcoin because that's going to create a tremendous amount of wealth in the years ahead. Now, what's kind of crazy about the situation is that even at such a stage, we're able to generate ROI of 20% per month right now. And that's purely through the mechanism of mining. It's not a special advantage that we have. You can go to a lot of different miners and they're generating these returns. And that's because the risk component is mismatched. There's a dislocation. Your returns are usually higher when there's a lot more risk. But we believe that risk is not being correctly viewed right now. So what you see as risky on the blockchain for a miner, for example, is not risky. This will change as people increase confidence and consensus in the Bitcoin network and in Bitcoin itself. Once that happens, the margins will shrink because more people will want to get involved in mining and they will bid the price up. Today, your money will buy you 20% per month. Once more people come into the market, they will bid up that price and margins will go down for the investors. That's why right now is such an opportunity. That's why Genesis Mining is running out of mining contracts. All the miners, our biggest challenge is keeping up with the demand. So it's important to understand that. The next thing I want to just mention is the banking system and the legislation. What's happening right now is the banking system and the legislative system are trying to figure out how they're going to approach Bitcoin. And they have two different opposing views and interests. Legislation, in other words, the government system, they're not threatened by Bitcoin. They just want to figure out how they can tax it and make money from it. Because, as opposed to the current system where legislators need to issue bonds in order to spur economic activity, with Bitcoin, they don't. A government doesn't have to issue any debt of their own in order to benefit from Bitcoin. That makes it very attractive for a government, especially a small and growing government, because they can just come out and say, we just want to tax Bitcoin. That's what South Korea recently did. A few days ago, I heard they came out and said, first they shut down some exchanges, and then they came out and opened them back up and said, we're going to put a 20% tax on Bitcoins. That's the legislation. That's what they want to do. They don't have a problem with Bitcoin per se. They just want to figure out how to make money. Now, the banking system has a problem because consensus, confidence, price stability, Bitcoin is able to do all of those things without a central bank. And that is concerning for central banks. Now, when you look at this, I'm not allowed to make predictions on Bitcoin price, but my point in saying this is forget about what Bitcoin will be in 6 months from now or in even 12 months from now. Think about what Bitcoin will be if it functions as a mechanism that allows the transfer of assets and provides everything that a central bank is providing right now. But it does that with the whole world, not just one currency. In other words, if SWIFT or IBAN has to compete with the Bitcoin network, and the Bitcoin network succeeds, you're talking about a market cap far greater than what it is right now. And that's exciting because we can all participate in that. And that's where we're at today. And I think that's what's exciting about what's going on, is individuals can participate in the creation of a new monetary system. And we as miners, we're the creators of a new capital market. A capital market that allows individuals to make 10, 15, 20% per month without the type of risk, this is my opinion, okay, without the type of risk that typically comes with 10, 15% per month returns, which is unheard of. And that's why I say it's a new capital market. These rules are new, and they apply to what's happening now. If you come from Wall Street and traditional finance, those rules no longer apply. This is an opportunity, it's a window, it's a time where money can be made by individuals who have access to investments that are yet to be dominated by Wall Street and those type of people. And that's what we're here to do, is to provide a platform that enables individuals to participate in a new capital market. We can go down a little bit more. How many minutes do we have? Okay, so a couple more minutes. Now, so Bitcoin is the new bond market. Our returns right now are about 20% a month. That's basically with current hash rates and difficulty. Essentially what we're doing is making our token holders 50% owners in our mine. You can do the math very easily. An ASIC miner generates about $650 a month. For every $1,000 invested, your net is about $226. It's about 4.5 months ROI, return on your investment. And then the money continues for indefinitely. We have 20% in the capital structure. You notice there was a 20% reinvestment. The reason why we have that 20% reinvestment and it doesn't come out of the investor's pocket is because that money goes back into buying new mines so that your mine is actually able to generate more for you over the coming years. It doesn't stop after 2 years. It's very important to understand our advantage over Genesis mining or any cloud mining contract. They end after 2 years. We don't. You're an actual equity participant, so to speak, with us. And we're putting money back into the mine so that your returns will continue in perpetuity. Now what we've done is I'll close with this and we'll get to questions, but what we've done is we had to decide how we were going to market ourselves. And instead of coming up with an advertising budget, what we decided to do is to say, look, we know a lot of people are going to be interested in this and want to participate. So what we're going to do is create an advisory program where we can bring advisors and pay them 10% commission so that they can go out to their network and bring on investors for us. And this is a much better way to scale our business because this isn't going to be our last ICO. We want to build a network of investors, give them their returns, build our business, and it's a win-win for both. So what we're doing is building this referral system in our ICO, which the pre-sale starts February 10th. We're currently at the private pre-sale. And just to give you an example of what the economics are, if you're an advisor, let's say you raise $100,000, that generates $10,000 in ROC tokens for you, and each $1,000 generates $200 a month. So you raise 100,000, you get 10,000 in ROC tokens, and that 10,000 gives you $2,000 a month in BTC for over 2 years. It's very compelling, and it's very real. And that is because capital markets are dislocated from the blockchain right now. That's the opportunity that we're providing. So with that, questions?
Thank you very much.
Okay, I'll take
Do you
this
have
one.
your own algorithm to basically calculate the nonce for the block and get the rewards?
So yeah, so we only mine Bitcoin.
I mean, do you have your own algorithm to validate the blocks?
Yeah, absolutely.
Okay, so is it proprietary?
It's all part of the ASIC. The ASIC miner is mining right away. Once
No, you
plug
need
it
a
in.
software as well. So some companies basically write their own code. So it's not about having a bigger hash power. It's
Right.
about having the right algorithms to find the nonce to get rewarded.
So I don't know the answer to that question actually. The CTO would know the answer to that question.
Second question is, if you reinvest,
Yes.
doesn't that dilute my share?
Yes,
in
you do get
future?
diluted. You do get diluted a little bit, but you get diluted. The compensating factor is that you don't lose your investment completely after 2 years. So there's a certain amount of dilution because we all get diluted because you've gone from 50%, and as your hash power slows down, let's say a year from now, you're only reinvesting that 20%. So there's a lot of factors that go into that. Yes, you get diluted, but if the price of Bitcoin goes up, then you got compensated even for your dilution, right?
Yeah.
So you kind of got to look at everything, basically.
What about your estimated ROI over 12 months period? Because the challenge is going long run with mining rather than short run.
So again, there's variables in this, right? What I'm basically providing is today's snapshot. We all know that if Bitcoin price goes up, you know, the difficulty will go up, but your ROI also goes up. So I'm giving you what it is as of now. That's also why I addressed our long-term view of Bitcoin. You gotta have a stance if you're gonna get into mining, you know, because you're not in it to make, you know, 4 times your money like an ICO and then you sell and you go to the next one. So our stance is long-term view. If you have that long-term view, then you'll know that some months you'll have more, some months you'll have less, but in the long run, you're way ahead of the game.
My biggest problem with Genesis mining is that I have to wait 4 to 5 months
Right.
before I get started.
Right.
How does it go with your company?
Okay, so the reason why you have that problem is because the biggest challenge for miners is getting the capital expenditures, the asset, the miners. So, you know, I'd love to sit here and say we're never going to have a problem, no matter how much money we raise, we're going to get our miners, you know, the next day. That's part of the logistics that we have to deal with, and that Genesis has to deal with, and everybody has to deal with. And there's no quick answer to that. We all have to, work on capital allocation. We got our money, now we got to make sure we get X amount of miners operating so that we can generate the returns for those investors. So that's part of the logistics that we work on. We do purchase from Bitmain directly. We have a relationship with Bitmain in China. Malik goes to China about, once every 2-3 months. He's constantly going back and forth. So, that's kind of our job. That's one of the things that we have to do well.
Because if you look at the market, for example, for an S9 miner, you'll be paying around $1,500, which is 5,000 dirhams. And on souq.com, you can, for double the price, you can
Yeah, this is one of the problems is